So as I mentioned at the top of the show, I'm really impressed with how this market held up to yesterday, and today's action is really compelling as well. So we saw rotation from technology, but buyers didn't rush to the sidelines, right? They're looking for something to buy. Now, earlier it was the exact opposite, right? The market faded after a strong start, but again, there was technology, communications, and let's face it, utilities are de facto AI play these days. But the standout, the real estate sector, really making a sustained, intriguing move. In fact, my next guest, he likes the whole spectrum of home builders here. So I want to bring in B. Riley Wealth Chief Market Strategist Art Hogan. Art, you know, how are you reading, though, overall, before we get these specific ideas, just since Friday's sell-off to today's action, you know, how are you reading the way the market's holding up?
Well, three things. I think this reminds us a lot of 2018, right? So every headline out of the trade talks with China moved the markets, 0.5% to a full percentage point. We're getting that same kind of action, which means we're probably getting closer to the end, not the beginning of this. I think that both sides want to get come to some resolve here, but the market is hypersensitive right now, especially with the government shutdown, to any friction in the trade talks with China. We certainly had a lot of that over the course of the last three trading sessions.
Yeah, and it's really interesting. I guess the market's sort of like, at least learning to read the cues, right? We may do this with tariffs. We have until X date, which is a date in the future. We know that Xi and President Trump are going to meet. And I'm assuming people expect something positive or the needle to move in a more positive direction.
Yeah, certainly. Pretty simply stated, I think both sides have something that they bring to the table. They're not going to meet unless they're going to do that. And I think, bringing to the table would be China agreeing to buy ag products, including soybeans, and us finding a way to give licenses to the chip makers, especially NVIDIA, on the H20s, that they still have an inventory that China wants. So yeah. I think there's room in the middle for both of that. And I think that there's plenty of give and take. But neither one of these guys is going to meet unless they have something to bring to the table. The fact that they're meeting, I think, is a good sign. And
I also think the saber rattling ahead of the a meeting is a good sign, to be honest with you. I think they're both positioning themselves so that when they sit down at the table, they both feel like they're coming from strength. Let's talk about making money, though. You have a home builder barbell, DHI, D.R. Horton at the low end, Toll Brothers at the high end. How does that work?
Yeah, I'll tell you exactly how this works. So you want access to the home builders, and the best way to do it is either buy the basket or buy two of the best. I think the best on the low end clearly is D.R. Horton. They've done some amazing things, not the least of which is one of my favorite moves they made over the course of the last 18 months is making houses a bit smaller. We got to a place where the average square footage had ramped up to a place that was unreasonable for a first-time buyer. So they're bringing that back down. They're in 26 locations around the country. They've got the broadest distribution and the lowest entry point. So that's the low end of that barbell, and I think you'd be real happy with a company that's as well run as D.R. Horton.
Yeah, I mean, but I will miss the McMansions. Okay, let's talk about the real estate agent plays. Rocket, I mean, this is a stock at one point was a fan favorite. And Open Door, I got to tell you, we've had a guest on Open Door for like, I think it was like $3 maybe. So both of them have come down a lot. You think they've got room to the upside here?
They do. All you need is pick up in housing activity, and both of these stocks are going to do well. And it doesn't have to be new homes, which is why you buy the home builders, existing homes. And what moves existing homes is going to be the 30-year conforming mortgage coming down. Let's say we drift down to 3 3/4 on the yield on the 10-year. That means if, in fact, we mean revert to the 150 basis points that is usual difference between that and the 30-year conforming, you're going to have a 5 1/4 or 5 1/2 30-year conforming interest rate. And I think that's going to drive existing homes. And in that situation, both Rocket and Open are winners.
All right, so we're buying these homes, and now we have to fill them up with stuff. On the high end, you like Restoration Hardware, which is now simply known as RH, and Williams-Sonoma.
Yeah, it's amazing. Everyone thinks about housing-related stocks when they first go to Lowe's and Home Depot. Sometimes they'll think about Sherwin-Williams and some of the other. These are two of the most intuitive plays and two of the best-run companies. So in both cases, whether you're buying a new home or you're buying an existing home, but it's new to you, you're going to need everything that's sold at both RH and Williams-Sonoma.
Good stuff. All right, always appreciate the conversations. Thank you very much.
Thank you.
All right, see you soon.